A subprime mortgage is a loan granted to individuals with lower credit scores who present a higher risk to the lender. The term subprime refers to a credit rating that falls below the prime standard, representing a higher chance of loan default. While standards vary, lenders often view scores below 580 as indicators of higher risk when approving home loans. These loans compensate for the increased risk through higher interest rates and stricter requirements compared to standard mortgage products. Prime mortgages are reserved for borrowers with strong credit histories, while subprime loans act as an alternative for those with credit challenges. Because of the risk involved, lenders charge significantly higher interest rates on subprime mortgages to protect their capital. Remember that in any lending environment, the interest rate you are offered is a direct reflection of the lender's risk assessment. Understanding these lending terms helps you make informed choices about your housing options. Check back soon for more basics on personal finance.